What if the long-awaited flip-the-switch moment for XRP has finally arrived? For years, investors have been speculating about this game-changing event, but few truly understand what it means until now. I believe we've just witnessed the event that will define the future of XRP, and everything has changed since that moment. If you're wondering what's happening, why it matters, and how it could impact your investment, stick around because we're diving deep into this turning point. Welcome back to the channel, everyone. If you're new here, make sure to hit that subscribe button after watching because you won't want to miss what's coming next. Surely you are following Bitcoin, right? Although we have seen it get closer to the $100,000 mark, there is still a small gap. Currently, Bitcoin is near this level and I believe is only a matter of time before it breaks. However, what is more interesting is that other coins are gradually gaining attention. In addition to Bitcoin, we are seeing a strong wave of growth from utility-focused projects such as XRP, ADA, Algo, ICP, Avalanche, hbar, and especially XRP. These projects have been ridiculed for years but are now topping the charts with incredible growth. In just the past 7 days, some of these projects have recorded growth of over 100%, while XRP alone has increased by almost 70%. So what has changed? Why are coins that were previously overlooked able to break out so strongly? Let's analyze this trend further in today's video, and don't forget to leave your comments on this growth. The past 30 days have been absolutely remarkable for the cryptocurrency market. If you take a closer look at the top 500 cryptocurrencies, you'll see some impressive movements across the board. Sure, meme coins are still making their rounds, but the real attention has been on a broader group of projects. The top gainers aren't just random tokens. Many of them are solid, utility-driven projects that have been gaining traction for some time now. For instance, one project I personally hold, Telecoin, has seen a significant rise, and I'm sure many of you are seeing similar patterns with projects you're invested in. It's exciting, right? There's a palpable sense of energy and optimism in the air, and it feels like things are finally starting to break free from the long, slow grind we've been in. We're not just talking about a few percent gains here and there. We're talking about projects that are growing rapidly, pushing through resistance levels and climbing up the rankings at a pace that feels almost unprecedented. Now, the real question is, what's causing this surge? Could this be the actual flip-the-switch moment we've all been waiting for? After years of uncertainty and speculation, is this the turning point where the market finally finds its momentum and things take off for good? We've heard the hype for years, but could it be that we're witnessing the start of something bigger than just a temporary spike? The truth is, no one can say for sure, but what we can see is that many of the top projects right now are beginning to show signs of real adoption and utility. That's something we've been waiting for, projects that not only have solid tech, but are starting to get recognized in real-world use cases. And if this trend continues, it could mark the beginning of a sustained bull run, rather than just a brief moment of excitement. There's been a massive wave of news lately, and it's hard to ignore. One of the biggest headlines: former President Trump has proposed creating a crypto-specific role at the White House. This move could be a game-changer for the industry, but that's not all. Major companies like Ripple, Kraken, and Circle are jumping on board, expressing interest in joining a new crypto advisory council. The goal: to reshape U.S. policies and drive innovation in space. Could this be the turning point that accelerates the mainstream adoption of crypto? Let's dive into what this could mean for the future of digital currencies. In addition to all the recent developments, things just got even more interesting. Gary Gensler announced his resignation as SEC chair, and that news sent waves through the market, giving it a nice boost. But that's not all. The Commodity Futures Trading Commission, CACT, has also issued recommendations to adopt tokenized assets, which could pave the way for widespread adoption of digital assets in the mainstream. At the same time, Congress has started exploring regulatory frameworks for stablecoins tied to the US dollar, further solidifying their potential role in global finance and reinforcing the dollar's dominance in the market. So what does all this mean for the future of crypto and traditional finance? Could these moves be the catalyst that finally bridges the gap between digital assets and the traditional financial system? Let's break it down. Today, the Blockchain Association took a significant step forward by sending a letter to President-elect Trump and the new Congress, outlining key priorities for the crypto industry moving forward. This letter comes at a critical time, as the industry stands on the cusp of major regulatory and policy shifts that could shape its future for years to come. In the letter, the Blockchain Association emphasized several critical points. First, They called for an end to the discrimination against crypto companies, which have long been subjected to unfair treatment and regulatory uncertainty. Many crypto projects and businesses have faced hurdles that traditional industries simply don't encounter, whether it's through restrictive banking policies or unclear legal frameworks. By ending this discrimination, the association argues the industry can be given a fair opportunity to grow and thrive. The letter also stressed the urgent need for regulatory clarity. For too long, crypto developers, investors, and businesses have operated in a gray area, with differing and sometimes conflicting regulations at the state and federal levels. The Blockchain Association advocates for a unified, clear regulatory framework that can offer certainty and help create a level playing field. Lastly, the association called for greater collaboration between the public and private sectors. They believe that a partnership between government agencies and the private industry is key to driving innovation in blockchain and cryptocurrency. This collaboration would help ensure that new technologies are nurtured, security concerns are addressed, and the U.S. can remain competitive on the global stage. So what does this mean for the future of crypto? Will we see these priorities take shape under the new administration and Congress? And how might this impact the industry's growth and development in the coming years? All these recent developments are pointing to a significant shift, one that became especially apparent after the November 5th election. In just over 2 weeks, the crypto industry has experienced what feels like a monumental turning point, almost as if a switch has been flipped. For years, crypto advocates have been pushing for clearer regulations, wider adoption, and a better understanding of the true potential of blockchain technology. Now, we're finally seeing the fruits of that labor. To me, the real flip the switch event wasn't just the change in leadership or even the new policies being put forward. It was the dismantling of the anti-crypto agenda that has plagued the industry for so long. There's been a shift in the narrative. The heavy skepticism, the regulatory pushback, and the widespread dismissal of crypto as a bubble or fad are now starting to fade. Instead, we're seeing governments and major institutions begin to acknowledge the massive potential that exists within this space. What we're witnessing is a real shift in perception. From regulatory bodies like the SEC and FEC to Congress, and even major corporations, the stance on crypto is evolving. This recognition of crypto's potential to revolutionize industries, provide financial inclusion, and reshape global finance is a huge victory for the space. So, could this be the beginning of the end for the long-standing barriers crypto has faced? Is this truly the moment where crypto goes from being a fringe asset to a mainstream force? Only time will tell, but all signs are pointing to a new chapter in the history of digital assets. This could very well be the moment we've all been waiting for. XRP has now broken through the $1 barrier, and it's showing no signs of slowing down. But it's not just XRP. Projects like Selm, Stellar, hbar, hedera, ADA, Cardano, Ext, and Algorand are also seeing remarkable growth and making waves in the market. These utility-driven tokens, which were once ridiculed and dismissed by many as mere speculative assets, are now proving their worth. For years, these projects struggled to gain traction and were often overshadowed by the more hype-driven coins in the market. However, with increasing adoption and real-world use cases coming into play, they are finally earning the recognition they deserve. XRP, for example, has been making huge strides as a cross-border payment solution, while XSOM is gaining ground as a leader in remittances and financial inclusion. Meanwhile, hbar's unique consensus algorithm and its focus on enterprise adoption are positioning it as a potential powerhouse in the blockchain space. ADA, XDEC, and Algo are also seeing significant gains thanks to their focus on scalability, interoperability, and sustainable blockchain solutions. These projects are no longer just speculative plays. They are becoming the building blocks for the future of decentralized finance, DeFi, and blockchain technology. The broader market is starting to recognize that utility-driven projects are the ones that will drive long-term growth and innovation, not just the ones that are riding the wave of short-term hype. So what does this mean for the future of crypto? Are we witnessing the rise of a new generation of blockchain projects that are built to last, or is this just a short-term trend driven by market speculation? Let's break down what's really happening behind the scenes. Notably, the Commodity Futures Trading Commission, FECT, is taking significant steps forward to provide clearer regulatory guidance for utility token projects. Caroline D. Pam, a CAF commissioner, recently made a powerful statement during a visit to Ripple's headquarters, where she emphasized the critical need for more predictable and consistent regulations in the crypto space. Pam noted that the lack of clear guidelines has been a major hindrance for innovation, especially for utility token projects that have legitimate real-world use cases but are caught in legal limbo. This push from the CEFT is particularly important as Ripple continues to fight its ongoing legal battle with the SEC, which has been dragging on for years and has created uncertainty not only for Ripple but for the entire crypto ecosystem. The SEC's stance on classifying certain digital assets as securities has created a murky regulatory environment that has made it difficult for crypto developers to plan and operate with confidence. On the other hand, the CFTC's involvement signals a potential shift toward more favorable regulatory treatment for utility tokens and projects that seek to bring tangible value to users. What's really interesting here is that the CEFT is proposing a framework where utility tokens could be viewed as non-security commodities, as opposed to the SEC's stance on treating them as securities. This difference in regulatory approach could set the stage for a more balanced and comprehensive regulatory structure that could support innovation while still protecting consumers and investors. But here's the big question: could the CFTC's move to provide clearer guidance help Ripple and other crypto companies navigate the regulatory landscape more smoothly? Or will the tension between the CEFT and SEC create even more confusion for the industry? Let me know your thoughts in the comments below. According to their recommendations, utility tokens would be classified as non-security commodities under U.S. law, a move that could bring much-needed clarity and legal certainty for developers and projects in the crypto space. For years, one of the biggest challenges for crypto developers has been the lack of clear regulatory guidelines, especially regarding how different tokens should be classified. This uncertainty has often led to legal battles, delays in project development, and hesitancy from institutional investors who fear regulatory backlash. By classifying utility tokens as commodities rather than securities, this recommendation would create a clearer legal framework, enabling developers to innovate and grow their projects without the looming fear of SEC scrutiny. It could open up opportunities for new decentralized applications, dapps, blockchain solutions, and other innovative crypto projects to thrive, knowing they are operating within a defined legal boundary. This step also holds broader implications for the crypto industry in the US. It's not just about compliance, it's about setting the stage for sustainable growth and fostering a competitive environment where innovation can flourish. By distinguishing utility tokens from securities, the US could position itself as a global leader in blockchain innovation, attracting more startups, investments, and talent to its shores. Ultimately, this marks a major shift in how the US government is beginning to approach crypto regulation. If adopted, this could lay the foundation for a much more favorable and growth-oriented environment for digital assets in the country. It's a step in the right direction, one that could usher in a new era for the industry. And just when you thought things couldn't get more interesting, here comes another major development. SEC Commissioner Mark Wada has recently advocated for the creation of regulatory sandboxes and safe harbors to foster innovation in the crypto space. This move could provide crypto startups and projects with the flexibility they need to grow and experiment without being bogged down by overly restrictive regulations. Wada pointed out that with a change in leadership at the SEC, we could see a significant acceleration in the progress toward clearer and more supportive policies for the crypto industry. This is especially important as the market continues to mature and regulatory clarity becomes more crucial for investors and companies alike. So what does this mean for the future of innovation in crypto? Could these proposed changes be the breakthrough that allows the crypto industry to truly flourish? Let's dive deeper into what this could mean for the ecosystem. Personally, I believe that utility-driven projects are on the verge of explosive growth, and they could very well surpass their all-time highs from 2021. This is an incredibly exciting time for the crypto space, with so many potential game changers on the horizon. We're seeing more real-world use cases, better adoption, and clearer regulations, which are all contributing to a brighter future for these projects. What do you think? Do you believe that utility-focused projects are poised for another breakout, or do you think the market will take a different direction? I'd love to hear your thoughts in the comments below. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you never miss out on future updates. Thanks for watching, and see you in the next one.